Interest rates have been dropping by a whole lot, and you're probably getting a ton of ads. You're seeing all the news about refinancing. You're probably getting a ton of mail about refinancing as well. And probably it's got you thinking, does it make sense for me to refinance my home right now? Now, it's no secret that interest rates are now much lower than what they were in 2024 and in some parts of 2023. So if you guys took out a mortgage over the last 2 years, refinancing is something that you should consider, especially if you have an interest rate over 6.5%. Interest rates have dropped over the last 5 weeks. Rates have been dropping steadily, and we really have hit some of the lowest interest rates in the last 6 months, with the average conventional mortgage rate in the country at roughly 6.2 to 6.7%. FHA rates sit at roughly 5.5 to 5.9%, maybe 6%, give or take. And then VA rates are anywhere between 5.5 to 6.125%. Interest rates, depending on the mortgage lender that you work with. Now, let's talk about the main reasons why people are refinancing right now in 2025. Obviously, most people are looking for the lowest interest rates, but I want to dive in a little bit deeper because honestly, most homeowners don't really know what this means. The main reason why you want to lower your interest rate is because it may provide you with a lower monthly payment. For example, say that you took out a mortgage for $500,000 in January of 2024 with an interest rate of 7.25%. Right now, depending on your credit scores, equity position, and obviously some other factors, you may have access to interest rates as low as 6.25%, which means that you will now be paying about $3,078, so you will be saving yourself $332 a month. Refinancing can help you lower your interest rate, cancel your PMI or your mortgage insurance, lower the amount of years that you owe, so getting a lower term, without increasing your current monthly payment. So now you see how I bundled roughly 3 or 4 different benefits that you can get from refinancing in one spot. And that's honestly, guys, the beauty about refinancing and why you need to be open to that idea, because it can help you save a ton of money and it can help you achieve other goals as well. What if you have a ton of credit card debt or unsecured debt with a very high APR, 20, 30%, and you have a lot of equity in your home? You can tap into that equity with a refinance, be able to pay off all of your unsecured debt. Folks, your monthly savings are going to be greater for really 3 main reasons. The first one is going to be obviously the difference between how much you're going to get that interest rate lowered by. The second is going to be obviously how much you owe on the mortgage. And third is going to be your amortization period. Now, this is why if you only say you owed probably a $200,000 mortgage on an 8% interest rate, and if you were to refinance your payment into a 7% rate, you potentially save around $136 a month. If you owed $700,000 with an interest rate of 7% and you got down to say 6.5%, you will save about $232 a month. So obviously, while decreasing your interest rate by 1 percentage point can help you save more money, truth of the matter is, folks, is that even a 0.5 percentage point reduction can make a huge difference in how much your monthly savings can be and also how much interest you're going to pay over the life of the loan. Like, let's take the previous example of a $700,000 loan, going from a 7% to a 6.5% interest rate, lowering that payment by $232 a month. What if you were to take those savings and apply them back into your loan? If you were to do this, you will be paying your loan in roughly about 25 years. So 5 years faster, and you guys will save yourself about $147,000 in interest. So guys, look, when you start saving money and you know what to do with those savings, especially in the most expensive assets that you have, you might actually make some crazy things happen. Also remember that with a refinance, you can accomplish multiple things, and that's why the 1% rule doesn't really reflect what most people face nowadays. Because, like, say for example that you're taking that same $700,000 loan with a 7% rate, but with a $200 a month mortgage insurance payment. And if you were to refinance that into a 6.5% rate, and you're only reducing that rate by 0.5 point, but now you have enough equity in the home and you can eliminate the PMI altogether, then you will now be adding that additional $200 payment savings from the PMI into your interest rate savings. So you will save about $440 a month, which is, even a lot more money. All right, so finally, I want to talk to you guys about the closing costs, and I want you to understand one thing, and that is that closing costs are always going to be there when it comes to refinancing a mortgage. And I know that you're probably thinking, Marcos,
my lender said, or I talked to somebody, and they said that there were no closing costs.
Folks, look, truth of the matter is, there is not a single mortgage company that works for free, okay? I own one. So I know it doesn't make any sense whatsoever for a company to pay for marketing, to pay for loan officer salaries, for underwriters, for processors, for closers. Like, It's incredible how people think that there are no costs when it comes to getting a mortgage loan. But now that I got that out of the way for you, I'm going to bring this little thing called a loan estimate. And this loan estimate is going to be the document that you're going to ask your lender to give you so that you can see the breakdown of all the fees associated with refinancing your mortgage. Let's go through line by line. It's going to be really easy. Now, line A is going to be the one that you're going to take a look at to see the mortgage company's fees, and also to see if you're paying for, a lower interest rate, meaning discount points. Sometimes it makes sense to pay for discount points, and sometimes it doesn't make any sense. You need to do the math and figure out if paying for discount points is something worthwhile. But do understand that loan officers and mortgage companies use discount points to kind of gauge interest for people to refinance or to sell you on refinancing. And that's one of the main reasons why I tell all my clients to stop looking for the lowest interest rates, because you're not seeing the bigger picture. So just kind of think about that. Line B is the one where you're going to see other fees associated with your loan. So probably like credit report fees, appraisal fees, and things of that nature. Some refinances, folks, don't really require appraisals. Maybe if you're doing a special type of refinance like an FHA streamline or a VA streamline, those don't require appraisals. And some conventional refinances don't require appraisals either. Line C would be things like real estate fees, attorney costs, title insurance costs. We call them third-party fees, and those will change depending on your loan amount, the state where you live, and also, some attorneys are more expensive than others. Line D would be things like taxes and other government fees, recording fees, transfer taxes. So these are just taxes that you pay for taking another mortgage. Line E is the one that you're going to find for prepaid items, such as prepaid interest. This is the reason why you get to kind of skip two payments, one payment or two payments, depending on when you close on the loan. Is your escrow setup? So if you set up an escrow account or one is required by the lender, they're going to set up this escrow account. Your lender is going to increase your loan amount to cover for all of the closing costs. And this is the reason why you also see a lot of people talk about no closing cost refinance. They are financing everything into the new loan, and you don't have to pay anything out of pocket with potentially only an appraisal. And that's it. But just understand that there are always going to be some sort of fees for refinancing. Look, whether or not it makes sense for you to refinance your loan right now, you do need to be paying attention to what interest rates are doing. My recommendation is partner with a mortgage professional that you know and trust. And that way, you develop some rapport and really have them kind of run some different scenarios based on what you're looking to get accomplished. Refinancing is more than just getting the lowest interest rate. I can tell you, because I've done well over 1,000 mortgage loans. Everybody's situation is a little bit different. Hopefully you folks enjoyed the video. And if you did, just give it a thumbs up, and any comments, just put them in the comment box below, and I'll talk to you guys soon. Take care.